So this is the wrap up for the live market open for Friday. Happy Friday, March 4th. It's NFP day. Okay, we have a weaker dollar across the board. Markets are happy with that because it means less tightening from the Fed, a weaker dollar. Non-manufacturing PMI in the United States came out okay at 53.4, but the unemployment component fell to contraction, implying future firing in the biggest sector in the United States, services. Okay, also markets, services PMI was confirmed at contraction level. Bad news, jobless claims also missed, and so did factory orders. All in all, a weakness of the US dollar across the board. In the United Kingdom, services PMI also disappointed, but it only had a short-lived effect because of the great weakness of the US dollar, and Australian retail sales were okay. All right, so this weakness of the dollar is expressed very nicely across the board. So euro dollar made a move to the upside, 109.33, 109.60, 110.70 a resistance, 108.90 and 108.35, 107.70 are lines of support. Pound dollar, as I mentioned, not so justified rally. Some kind of support here at 141.25, resistance 142.30. Further support 140.50, further resistance only at 143.80. Okay, dollar yen took less advantage of this weakness of the dollar, 113.82. Very strong support here at 113.20, 114, 114.7, 114.50 are lines of resistance. The yen still attracts safe haven flows from time to time. Dollar CAD, the Canadian dollar, enjoying higher oil prices. Yesterday, they topped $35 in WTI crude oil. Support at 133.70, resistance, the old and strong line of 134.60, followed by 136.50. On the downside, we have 132.50. Sorry, 132.80. Anyway, Aussie dollar making a move higher. 73.75 is perhaps some kind of resistance. Further resistance, 74.40, 75. Support 72.80. Okay, Australian dollar enjoyed lots of good news today. Yeah, Kiwi dollar also with higher milk prices earlier in the week, and the weakness of the US dollar, 67.50, resistance 67.90 and 69, support 67 and 65.50. 65.50 to 67 is the old and beaten range, if you wish. Okay, so that's for currencies. Let's now, the big event for today is the non-farm payrolls. Here is the order of things to watch for. Well, first of all, let me say that we have the live coverage from 1 GMT. The link is there. I put it on the chat. The event itself, the release at 1:30 GMT, 2:30 in Europe, 8:30 in the eastern coast of the United States. Expectations are better than last month. 119,000 jobs gained in the month of February. That's the first thing to watch, the headline figure. Of course, revisions are also important. Average hourly earnings expected a modest rise of 0.2 month over month after 0.5. Year over year, we're expecting, I think, more like last month, 2.5, which is good, better than the average we had last time. Anyway, first thing to watch, non-farm payrolls, then average hourly earnings, then the other figures like the unemployment rate, which has political implications. It's expected to remain at 4.9, the participation rate, which was at 62.7. And for seeing the wider picture, the real unemployment rate, U6, and the employment to population ratio. Anyway, what's important here, we're currently in a more straightforward market reaction. Good news is good news, okay? It isn't always the case, but if we have a better than expected report, then we have a stronger US dollar. If we have a weaker than expected report, we have a weaker US dollar. In general, of course, we can have various types of mixed reports. We can have a big gain in jobs, but poor wages. Last time we had a poor gain in jobs, 151,000, but we had a strong gain in wages, which was good news, and the report was eventually seen as a winner. So there are lots of shades of gray, if you wish. Anyway, hopefully we'll have a good report, because remember, it's not only US dollar up or down, it's also people finding jobs and making money. Anyway, that's the main event for today. I would say that, I mean, answering the question of Jax before, that the Australian dollar looks strong. If we have a really bad non-farm payrolls report, we could see an extension of the rally. The Australian dollar is rising on a good basis. And if we have a strong report, I see the pound is vulnerable as making the recent rise just as a correction in spite of bad data in the UK and the fears of Brexit, which are still prominent. Okay, so that's the wrap up for today. Before we move to the preview